Do you ever think about what happens when all the gates open at once? It's billions of dollars coming in all at once, not slowly over weeks or months, but all in one day, because that's what Stephen McClurk, CEO of Canary Capital, says could happen if spot XRP goods go on sale. He thinks that $3 billion could flow into XRP in the first 24 hours. That's not a guess. That comes from someone who has put out ETFs before, and the numbers get crazy really quickly when you use Jake Claver's XRP multiplication theory to do the math. I'm not telling you what to do with your money. Before I explain what these numbers might mean and how they could instantly change the value of XRP, I want you to understand something. This possible setup isn't a chance one. After you watch this video, go look at it right away. Oh, okay, let's break this down because this is crazy. ETF manager Stephen McClurk said straight out that he thinks a spot XRP ETF will get $2 to $3 billion in new money on the first day. And he said that was strong. He said it was like when Bitcoin futures first came out and over $1 billion changed hands in the first 24 hours. And the crypto market wasn't nearly as big back then as it is now. That's where things get really interesting if we just use his guess, $3 billion, and Jake Claver's multiple math. People make a big mistake when they look at the total amount of XRP, Jake Claver said. A lot of people like to say that there are 100 billion XRP, but the real question is how much can be bought, because that's important when lots of money comes in. How do you get multipliers? Spend $3 billion on coins that aren't even on the market. Claver thinks that there are currently less than 2 billion XRP on platforms. That's how much liquid you really have. Retail may have more in their own pockets, but the ETF money would first go to XRP, which can be traded and is easy to get. Here's how it makes sense. When $3 billion comes in and there are only 2 billion XRP available, there is a cash crunch that sets off a multiplier. Every dollar that is spent on those coins makes the price go up by a huge amount. Claver's math shows that that's about a 50 times increase at that point. That number is not a fluke. If there isn't much cash on hand, this is how supply and demand shock events work. Now, though, this is where things get interesting. If the $3 billion starts buying XRP and half of the exchange stock is gone in a day, you're no longer left with 2 billion XRP to choose from. This place gets you closer to 1 billion. That makes the increase twice as big. So that's how you could really get a 100 times increase in value from that one-day cash event. So let's picture this. 3 billion times 100 times $300 billion in market value growth. If you divide that number by the total number of XRP that are in circulation, you get about $150 per XRP. Yes, $150. To do that, experts use the same model they used when their Bitcoin and Ethereum ETFs went live. Before you say, that can't happen, think about what we already know. Analysts thought there would be a huge supply shock when Bitcoin spot ETFs came out in early 2024. Bitcoin's multiplier ended up being closer to 4x than 50x because huge institutional buyers stepped in to balance demand. That's the reason Bitcoin didn't 100x quickly. But there is something, not XRP. Bitcoin is very liquid with huge exchange amounts and big players who are ready to sell. XRP doesn't have that. The amount of XRP that can be traded is very small compared to its total supply. A lot of it is locked up in escrow or owned by long-term believers who aren't touching their bags. That's what makes this setting uneven. Picture a seesaw. Bitcoin is on the heavy side. A lot of stock, lots of buyers, and a lot of trade. On XRP's side, there isn't much liquidity. Users are very sure of their positions, and there isn't yet an ETF that can drain it. When that institutional money comes in, it could put a lot of pressure on the price of XRP. This can change lives, even if we don't reach $150. For now, let's stick with the safe 50x multiplier situation. $3 billion times 50, $150 billion in market value. That's about $75 in XRP. And that number could grow even faster if $5 billion comes in the first month, which McClurk thinks is very likely. Don't forget that this isn't just talk. This is about math and lack of resources coming together. It makes sense that Jake Claver, Zach Rector, and McClurk all come to the same conclusion when they look at the same facts. A lot of XRP is being used up quickly. Now consider this. Already, CME XRP futures had more trades than any other product that were worth more than $1 billion. That shows a real hunger among institutions. The people who are making these goods are not regular traders. There are family offices, companies, private wealth groups, and banks that want to get their names out there before everyone else. That means that when the spot ETF door opens, The money that has been waiting for regulatory guidance can finally move. It won't drip when it moves either. The market will be hit hard. Imagine that this is all going on at the same time that Flare Network opens up yield chances on XRP. At the same time that ETFs are coming in, people are lending, borrowing, staking, and making XRP into fake safe assets. It's not just pressure to buy. It's called energy pressure. That's creating wealth and locking it at the same time. This is what makes XRP different if you're new to it. XRP is not like meme coins or speculative layer coins that depend on hype. It is made to be settled. It was made to be useful at the business level. The business in general, not just DeFi. It's not often that energy demand and institutional inflows come together in a way that makes sense. This is the reason why a lot of wealthy people and private companies are quietly building up right now, because they know the event will happen soon. When it does, you won't be able to get in for less money again. The schedule isn't set in stone, but the progress can be seen. Everything points to the same result, from filings for CME futures and ETFs to the formation of custody partnerships that are happening behind the scenes. XRP is about to have its Bitcoin ETF moment, but maybe with more power. Plus, this is even more interesting because of this. Ripple's system is set up so that institutions can easily use it. They already have banking partners, ODL corridors going around the world, and payment rails that can handle a flood of cash in real time. The ETF for Bitcoin did not have that when it first came out. XRP does. Think about what will happen when the US thinks it needs a digital dollar infrastructure, but the Federal Reserve doesn't allow a CBDC to be used. What are they going to do? They will need a private partner that people around the world can trust. In fact, Ripple already fits that description very well. Brad Garlinghouse has said more than once that Ripple began as a payments company, but is really a blockchain infrastructure company. This means that making payments across borders was just their first area. They are getting ready for more than one area. And if a stable product backed by FedCoin or USD ever rides on Ripple's rails, XRP will connect it to the rest of the world. That idea is not a moonshot. That makes sense as a development, because Amazon Books was the first thing they sold, and it was only one column. After that, it grew into everything. Riff is the same. The same backbone ledger will be used for payments first, then maybe central bank lines, tokenized assets, and digital identity systems. Also add ETFs to the mix for some flair and a smaller market supply. You begin to see the whole picture. The price of XRP isn't just going up, it is getting a whole new set of business tools. How about the craziest part? A lot of people in business still don't know about this setup. The people in charge are asleep at the wheel, but engineers, fund managers, and infrastructure builders are busy installing the pipes. It will be too late when a store opens again. It will be too late to get the price. It's more important than ever to understand this stuff before it happens, because there won't be enough money in the market by the time CNBC reports that the spot XRP ETF has been approved. The cash will start to come right away. McClurk says that $3 billion will be hit on day one, but there is only about 2 billion XRP available. That's when the ratio goes off the charts. That's where the math changes from being abstract to being real. People will wonder how this happens so quickly when they see that increase in real time, because it always goes like that. The crowd can't see how it's set up. They only look at how people respond. The clues have been there the whole time if you've been paying attention and watching how the liquidity grows. This is a time when macro, regulation, and usefulness all work together perfectly. Not often. It's strong. The good times end soon. When Bitcoin's ETF first came out, everyone thought it would have a 50x multiplier because there wasn't meant to be much liquid supply. The truth is that this is what happened. Institutions knew there would be demand, so they put their stock out there first. They put Bitcoin into holding accounts, ETF providers got it early, and market makers made sure the flow was even. The price didn't go through the roof all at once. It kept going up. But that's not the case with XRP. It's not like there are huge amounts of XRP just sitting there ready to be sold. The exchange on Ripple doesn't work that way. Those tokens will be unlocked at set times once a month for $1 billion. Even then, Ripple often locks apart again. The flow of cash is slowed down. You can add to that the fact that platforms have historically low amounts of XRP on hand. This is not a view. This info is on the chain. From months on end, supply has been leaving organized platforms. That is, you're not just buying XRP if $3 billion or even $5 billion comes into XRP ETFs, you're paying for lack. Let's say that the ETFs start to use big custodians to get cash, maybe Coinbase, maybe Fidelity, or maybe a Ripple-related company once they have all of their licenses. As soon as that money comes in, it starts to take everything that is available. When arbitrage bots go crazy, spreads get wider, and all of a sudden, regular traders start buying whatever's left in a hurry. In this way, feedback loops are made. Large institutions are waiting in line for structured ETF products, while high net worth clients are trying to get in ahead of them. Regular people are also trying to get in before the next wave. It's not just a protest, it's a tornado of money. Also, keep in mind that this isn't some hype coin based on guesswork. You can already use XRP in real life. Banks, payment corridors, and other groups are already using it to send money across borders. To keep the network's main purpose strong, every new piece of cash added to the system makes it stronger, not weaker. When the price of XRP goes up, it actually helps bridge gaps in liquidity more. For that reason, a coin with more value can move more money with fewer units. This is the exact opposite of tokens that lose value when demand goes up. The way XRP is built was made for this to happen. Now think about what will happen if money keeps coming into the ETFs after the first day. McClurk said it could be as much as $5 billion in the first month. That could lead to a situation where all of XRP's open float is no longer liquid. People who own it won't want to sell. Market makers are going to get stricter, and ETF providers will have to keep paying more and more to get XRP. That's how a slow rise starts. The price went up even more than a pump. It wasn't just about price when Bitcoin ETFs first came out. It had to do with authority. Institutions finally had a doorway that was legal and followed the rules. That could be even more important in the form of XRP. Not only is it about gambling, but it's also about combining payments and money. Now comes the interesting part. Coin ETFs made around $15 billion in their first few months. Because Ethereum ETFs are mostly used by developers, they are likely to bring in less money. But XRP's ETF might be different. It's both a guess and a useful thing. It's an institutional tool and a bridge asset at the same time. This is the reason why some, like McClurk, think it could do better than Bitcoin's start numbers. And that means the following. It's not just 150 XRP if $3.5 billion comes in, and even a 50x increase stays in place for a short time. That's a short-term lack of cash that could cause prices to spike to triple digits and stay there until supply is restored. And even if it doesn't get that high, think about what will happen anyway. The value of Ripple's ecosystem goes through the roof as liquidity rises in ODL corridors and on-chain traffic soars. Just the way the prices moved would make news around the world, it would quickly change XRP's story from the coin that was sued to the asset that was controlled by institutions. The change in public opinion alone could keep the next multi-year bull phase going. Now make the picture smaller. Take a look at the big picture. It's against policy for the Federal Reserve to do what you want. As things stand, they can't properly start a CBDC without Congress. Global settlement methods are trying to become more up to date. You have the BRICS countries putting in place their own digital train plans. There is also Ripple in the middle of all of that. It has enterprise-grade software, real bank relationships, and a token that is meant to make liquidity easier. There is no better time than now, because the infrastructure is being made in the background while everyone talks about the Fed coin or a digital dollar. It also doesn't need a straight launch of CBDC. It only needs a private network that banks and states can trust to connect to. That's Ripple's whole goal. It was even Brad Garlinghouse who said it. Cross-border payments were the first thing that Ripple did because they were the biggest problem to solve. As soon as they fixed that, they could move into new categories: Bitcoin, digital identities, carbon credits, and the ability for CBDCs to work with each other. And each of those categories increases demand for XRP, which is the native asset of the XRP ledger. After all, this talk about ETFs is only a small part of a bigger picture. Everything else that Ripple has been putting up for years could go off with this. Also think about what the market will feel when XRP's price finally breaks out of its previous range. People have joked for years that XRP will never move. But when it does, when it starts making candles that cost many dollars in days, that joke turns into fear of missing out. Traders who haven't looked at XRP in years will now start to chase it. The news will change. The stories will turn around. That's how new market cycles start. Remember that XRP's on-chain efficiency is better than those of Bitcoin or Ethereum, because it allows for real economic flow without high gas costs or slow finality. That means it can be used by banks, fintechs, and even the government. Not just guess about it. In this case, the price action isn't separate from the facts. It's because of them. The money coming in through ETFs only speeds up what Ripple's business adoption started. Add what's going on with Flare now. A few days ago, Hugo Fillion, CEO of Flare Networks, said that people who own XRP will soon be able to use FXRP, a wrapped version of XRP, on DeFi platforms to make yield, borrow against it, and even mint stablecoins. That's a full utility loop. When institutional users have XRP that can earn them money, they don't just have exposure. They have cash that can be used to make things. That's what makes a real financial object different from a token used for speculation. And once ETF providers learn that they can make yield on XRP held by customers through regulated DeFi protocols, demand will grow in a new way. It's no longer just about price growth. It's also about return and capital efficiency. That's what institutions love. And if even a small part of that happens, it will change more than just XRP's market value. It will also change its role in global banking. It's possible for XRP to go from being seen as the case coin to being the backbone of the next generation of financial internet. And everything changes as soon as the market gets clear, as soon as the all clear is given and the ETFs go live. Because big investors don't change their minds like small investors do. They don't wait. They don't think twice. They don't look at charts on their phones and say, maybe next week. In one afternoon, they give out billions. And when that happens in a market with little trading volume, like XRP, where real available liquidity is a small part of total supply, prices don't move by much. It jumps around a lot. Uncertainty about regulations has kept XRP from growing for years. That energy can't get through because the wall isn't made of steel, it's made of paper. As soon as the paper tears, money comes in from all sides. Remember what took place when Ethereum ETFs were approved? Billions came in right away. This had a bigger effect on how people saw it, on its authority. The way businesses talked about Ethereum overnight changed after that one move.